think we all heard about FD. Now the question over here is that what is FD and what are their benefits and disadvantages? Let's understand in this episode in very simple words. As its name, this is an investment for a fixed time in banks, post offices, non-banking financial companies, that is known as NBFCs, and it can be opened in small finance bank, cooperative house bank, and some cooperative companies where we can get 4 to 7% return. If you know about NBFC, then you can go to this timeline. If you don't, then let's understand. NBFC is a bank which can provide you loans but don't provide savings or current account option like normal banks. FD is considered as secured investment, and that is major advantage of FD. You can sleep assuredly if you done FD because the investment amount of FD is almost safe and give you more interest rate than a savings account. But the disadvantage is we can withdraw amount easily from savings account, but in FD we can't withdraw our amount before time, otherwise bank can impose penalty. That means FD has less liquidity. Up to last in this episode, I will give you all the detail about in FD which help you to choose better way of investment. FD has advantages but it has disadvantages also. But let's talk about advantages first. One thing that everyone know is FD has less risk. But catch you over here is that if you done FD for 1 year on interest rate of 6%, then you can plan your future assuredly and easily because you know that you will get 6% interest at any cost. It's not dependent on share market stock prices gets higher or lower. It doesn't affect your FD. It helps to save taxes also. Any person can get incentive in this 1,50,000 income if he invest in tax saving FD. It has fixed tenure of 5 years and you can't withdraw it before time. That means it has no option for premature withdrawal. Even though FD is taxable in year after year interest, and one more thing that makes FD special is it has less paperwork. You can go to your bank and open FD easily, or you can do it through online. It's quite easy because you don't have to make research like stock market or bonds. No need to check any company's credit rating or history. Then I could say it's an easiest investment where you don't have to take experts recommendation or help, and that makes a perfect investment for senior citizens. And many banks gives 2% more interest rate than normal FD for senior citizens. Then let's talk about disadvantages of FD. It gives you security and assurity, but interest rate of FD is very low. Compared to mutual funds or stock, a smart investor can get 15 to 20% return, where FD can't give you more than 8%. In this situation, it is difficult to beat inflation from FD. Inflation decreases every year purchasing power of rupee. In this scenario, it is necessary to beat the inflation. Since India is a growing or developing country where inflation rates lies to 6% to 7%, FD unable to beat the inflation from its returns. Then it becomes more difficult if you need to premature withdrawal. When we done premature withdrawal of FD, the return gets very low. We show in the advantage of FD, we can save taxes, but you will get return through calculated income tax bracket. In this situation, your income gets high, then you have to pay more taxes on FD. Future unpracticability. If you want to do FD, then I will tell you how you can choose best FD. First of all, we should see that where we can do FD, because most of the people open FD where they have his savings account in the banks. But it is not correct always, because mostly NBFC, small finance bank and cooperative companies gives you more interest rate. Now the question over here is that why they gives more interest rates? This is because they have some risk. We mostly see in news cooperative banks shut down because of corruption and mismanagement. As a result, people lose their money. Even very big companies can be failed. That's why we should do FD in good credit rating NBFCs or cooperative companies. That's a safe option. Second is we should read the condition of withdrawal before doing FD, because in many places in the condition of premature withdrawal you can charged heavily as penalty. That makes your income less. If I say through an example, let's assume you done FD for 5 years for an interest rate of 6%, but by any chance in an emergency you have to break your FD in only 3 years. Then bank will impose penalty on you and you will get only 5% where your FD is for 6%. That's why we should always choose the bank who charges minimum penalty on premature withdrawal. Because life is not secure 100% and it can be happened in future when you need to break your FD. In past few years, the banks and the companies started giving loans at attractive rate on the FD owner. That's because in case of emergency, the FD owner should not break their FD. That's pretty good. And catchy over here is that you should check the time period of return. If a bank gives you 7% interest at 1 year and another bank gives you 6% at 6 months, then you should go with second option. Then you will ask me why I told this. That's because you will get more return at the end because of the power of compounding. If we're talking about FD, then you should know about RD, that is recurring deposit. This is an old method of investment like FD, but RD is best for those who want to invest a short amount every month or invest after a fixed time, where FD is a big investment at a time. If we put those together, FD will give you more return than RD, but it can be changed according to the market condition. FD is a good investment in itself, but if we look at the competition, then we found FD weak according to the time. There are many investment options comes in market like bonds and government schemes that is secure and more profitable than FD. And in the next episode, I will take you to the world of stock market where you learn how you can get good returns at very short time. So subscribe to grab more knowledge and information.